Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. So let's take a look what's going on the euro currency. It's a bit dramatic action. So let's try to deal with all this mess and make some decision and some trading plan that we could use currently, and trying to understand what's going on. Actually, yesterday you could see that the drop with our basic downside scenario has happened despite my comments and warning stats. It's mostly personal, so for me it was not quite comfortable for considering taking the short position, but as we said, everybody has to make its own decision, because if you were brave enough, you could make good money yesterday. So because in general we expect this downside action, but the conditions of the entry was not perfect, and Joe Napoli has the proverb that it's better to last the chance than the last the capital. So from that standpoint, I have decided to not take position, but in general it doesn't mean that context is wrong, and actually you could see that the action that we have discussed has happened. So on a daily chart, it takes the shape of the reversal bar, bearish reversal bar, because market has created the new top and closed below the lows of the previous session, and not even the previous but following sessions. So and simultaneously we've got the breakout of the flag pattern and the deep penetration of this confidence area. At the same time, market hasn't quite reached the downside target that we have. And here analysis stands relatively simple. If you make an analysis of the sequence of the downside swings on the market on the 4-hour time frame chart, it will become clear to you what particular performance market has to show if it remains bearish. If it will show different sequence of the swings, you will see that market is stop being bearish and turning to the bullish. On the on the cross market analysis, here we do not see once again something really bad. On the dollar index, it was the same attempt to go higher. This was also reversal bar to the upside. Target of this head and shoulder stands slightly above the neckline right there, but market stands inside of this and flirting inside of this confidence. So here we have the white confidence, while on the euro it's tighter, and actually market already shows the penetration of this confidence. So we will see, but currently based on this picture we can't say that something's going wrong with the bullish scenario on the dollar index. The same story on the 10-year yield. You could see that yes, market stands in tight range, but for now it mostly looks like the consolidation before reaching the OP target. So this also looks dollar supportive. We do not have any significant drop here, for example. From that standpoint of view, despite that markets right now showing some upward return, it doesn't mean that the bearish context is broken already. On the 4-hour time frame chart, here's what we have. All the bearish signs that we have discussed here has worked nice. So this catalyst triple to sell. Also, we were speaking about the bearish dynamic pressure, and now its minimum target has been completed because market has dropped below the lows. Now, as I said, let's take an analysis of the swings, what we have here with these head and shoulders. So here we have the acceleration down, this extension, AB leg, BC, which has been formed, turns in the shape of the shoulder. It was the contraction. Then we have got the next extension to the COP minimum target, and that has happened retracement, that's reaction on the nearest target, right back up to the neckline. So market has retested the neckline. So it means that the next action has to be the acceleration to the OP, because retracement on the COP has happened. So keep it simple from the theoretical point of view. Normal bearish market has to show extension to the OP, and that makes overall view relatively, as I said, simple, that because if we will not see it and market suddenly return right back up above the top, it will tell you that something is going wrong. That here is not more a bearish action, and it could put the shadow not only on some deep retracement, but actually all the hand and shoulders might be under the hazard of the distraction, because you can see that market hasn't reached the target of the hand shoulders, returned back up above the neckline, and it definitely will lead to the action above the head, above the shoulder. Consequently, action above the shoulder. Next step is action above the head. This is how the hand and shoulders usually fails. And currently, market stands at very important points. Actually, this is the last point where bears could consider taking the short position, if of course you haven't done this yesterday, where we discussed. So market has to continue downward action either right from here, or bearish context will fail. And this makes your decision relatively clear. So on the hourly chart, take a look what has happened. We've got the drop, really nice action, and market right now stands at the 618 level. It's last fifth resistance. That actually stands on this resistance swing, where you could consider taking the short position, 108.80. Stops probably has to be played in this case, well, theoretically above this area, but probably it might be even placed somewhere in between the top and the 618 level, because if market will break the 618 and keep going higher, well, it already will be something bad. And here you could see the possible consequences if this will really happen. Return right back up, immediately making possible appearing of the bullish head and shoulders right there. So it might be shoulder, head, and market performance start right arm. So in this case, the bulls will take control of the market, and it will be bullish turn to consider taking the positions. But meantime, right now, it's the bearish performance is not done yet, and here is an area that bears could consider for a possible taking position. Simultaneously, on the full time frame chart, we also have approaching the May CD indicator. So here's probably I have to add extension. Just a minute. So where does it stands for a current bar? Right there. So take a look within 2 bars. This probably will stand around the same 618 level. If, for example, you get the bearish grubber right there on the full time frame chart, that will be additional advantage for you to consider taking the short position if you have the bearish look on the market. So that's actually what we have in your current situation. Is not difficult for analysis and trading, but still it demands to making a decision. So I have explained everything that we have. Would you like to take the position here with this making the decision on taking the short entry? This stance is up to you. So that's the trader's job, and it's responsibility that you have with making the trades on the market. So let's see what will happen tomorrow. We already will get this central bank meeting, European Central Bank. So maybe it might be interesting. So let's see.